Hello there, my friends. Chris Marcus here with you for Arcadia Economics for this week's gold and silver market week in review. As has been the case certainly this year, a lot of interesting things happening, which we'll cover in the gold and silver space. Although to start off, you had the April unemployment number this morning, clocks in at a record 14.7%. This is obviously following everything that's happened with Corona. I mean, on one hand, not expected, just still it's a bit stunning to see the number that large. Turns out that this is a all-time high, at least though it was well below the 25% rate economists estimate was hit during the Great Depression. So I guess they are going to claim we didn't have CPI numbers, as fictitious as they may be. But at least as long as those have been compiled, looks like a record today. And first of all, sending warm wishes to anyone who's been affected in that sense. And I like to think that a lot of these things are shifting the world where maybe rather than building things that kill or oppress people in lands foreign or domestic, hopefully what's happening is that a lot of this labor force is getting reshifted. I continue to see the signs of whatever you call this bureaucratic monster, deep state, Illuminati, New World Order, cult, whatever it is. And again, I've tried to be careful about saying, avoiding, I think silver is going $100 tomorrow type thing. So it's kind of hard to know when the individual pieces or trigger points like that will occur, but certainly from everything I see that's going on in the world, it sure seems like I think there's good things coming. And very last part of today's video, I'll mention something that you may want to check out. Darn interesting at the very least. And we'll come back to that. So anyway, interesting though, because if you see here is John Williams' shadow stats, which kind of, I don't know if that's really an accurate barometer of unemployment because it's using the original government formula before it was tweaked to make the numbers look better for the government. So even that could be understating it, but you see here, I don't know if my face is covering it there, but March 2020, John Williams has at 35.7%. So certainly quite an impact there. And that number was reported this morning. We'll get to some gold and silver prices. I know you guys are already checking the darn price. I do the same thing, so not judging. But I know you're clicking Kitco or whatever feeds you use. I actually downloaded the Kitco app on my phone. Test that out, see how I like it. I haven't remembered to use it yet, but we'll see. Anyway, as we dig in, cash havens with 4.8 trillion fret about the unthinkable negative returns. I believe I remember when I was going through this before. The fear being, will we have negative interest rates here in the U.S.? And I'm going to point out something I haven't really seen too many people mention in this Sunday's call with Denver Dave Kranzler. We dig into that, but see, it used to be you had to use John Williams' shadow stats inflation number, and you could calculate that it already is a negative return. But just putting it in perspective, you see here is the U.S. 10-year bond yield, 0.685%. In a fantastic world where the Fed's inflation mandate is still 2%, which means that even as ridiculous and Mickey Mouse as those numbers may be, you're already, they're guaranteeing you, let's call it 0.7% for the mathematically challenged like myself. Although, you know what? Screw that. I'm going to bring back my old mock trading math skills and say 2 minus 0.685 is 1.315. and we'll see how close I am. So a negative 1.315 interest rate, because they're saying the Fed's already guaranteed that part. And you just connect these two data points. I mean, I'm not doing any complex calculus here. They're guaranteeing you're going to lose negative 1.3% on those treasuries. Of course, with the rate the Fed is printing at, you're going to lose a lot more than that. And as if you happen to catch that interview I did with Trevor Hall, we talked about that story that popped up Monday with there was someone from Reuters speculating would Trump default on the debt to the Chinese. So you also have a pretty high default premium, especially if you do something the government doesn't like, which increasingly seems like if you attempt to live in any way as a normal human, you get on their list. So do they then decide that you're not someone they should repay the money to? Again, that's speculation, certainly. I will be clear there. But I mean, look at the things that are actually happening too. So anyway, as you see here, hedge funds bet on gold as refuge from unfettered currency printing. Not shockingly, some of the macro funds are betting on gold. I always find it interesting with the tech funds on the COMEX, because really, as Ted Butler lays it out, I mean, it's one of those things that seems too ridiculous to imagine, but my understanding is that basically they've been getting worked by these banks for the better part of 30 years and not realizing that it's a bit of a rigged game. So if that ever changed, certainly that would change the market dynamics quite quickly, because the banks need someone to fleece on this trade. In fact, someone was asking me this week if the banks care about the price of gold or the manipulation and things like that. My best guess is the banks, on an individual level, don't care whether the price of gold is high or low. I think that might be different for the government, which is why I've always wondered if it's hard to construct a scenario where the government isn't looking the other way on what's going on. But the banks, I think the key thing is that if when silver or gold is, we'll say silver, for example, if you know for sure that it's going to move 40 cents, and especially if you have option trading or derivative knowledge, 40 cents is almost an unlimited printing press with what can be done if you know that in advance, which seems to often be the case. Again, not my words, from the Department of Justice using the RICO Act, describing JP Morgan desk as a criminal enterprise, something that is mentioned in the Big Silver Short audiobook. Just saying, it's in the description link below. Just if you haven't gotten it yet, people seem to like it, and we will leave it at that. So the next one here, this from my friend Nick Laird of Gold Charts or Us, sent an email out today to his list. Deliveries, this is about gold. Deliveries in May are well above historical averages. May is the off month for gold and the on month for silver, and gold is heavily in demand after 7 days in. So just passing that along, that's something I'd like to dig into more myself, the mechanics of the deliveries, but and really putting that into perspective, how much metal is being delivered. Craig Hemke, I think, is a great one who digs into that. His Sprott Money columns you can find online each week. Those are great. Kranzler talked about it a little bit this week, but anyway, we'll get a better handle on that. But here's a note for now to tide you over. Of course, the next story here. Come on, internet connection. There we go. The silver lining of the coronavirus deficits. Because it said silver, it came up in my Google filter, although it actually turned out to be quite an interesting article. You already know that coronavirus is causing a deep recession and record budget deficits. Congressional Budget Office pegging it at 3.7 trillion in 2020. I'll take the over on that. The U.S. will spend an extra 2.5 trillion, according to J.P. Morgan estimates. I will not read too deeply into the J.P. Morgan estimates myself, but you are welcome to if you'd like to. although I'm guessing that whatever JP Morgan is saying about the economy, you're probably going to giggle at maybe as much as I do here. So anyway, it's hard to get your head around 2.5 trillion. How big is that? Well, it's pretty darn big. You see, it's bigger than Social Security, Medicare. But well, let's get down to the good stuff here. Meanwhile, US gets a lot of revenue from technology. Oh, we'll come back to that. Where? Okay, here we go. So as bad as it has been in the US, it could have been much worse. Yes, I know that people will complain that government programs have been fast, but the programs have not been fair. Many people feel they have been overlooked, and many small businesses are struggling to survive. By the way, I just did email my accountant to see. Did anyone else get a $1,200 check? I didn't get one. Let's see. For now, I'm just counting my blessings that we live in a democracy that is willing and able to act when a crisis hits. Actually, here we go. But Congress, following that, Congress has passed the CARES Act very rapidly in response to coronavirus. The government acted much faster in 2020 than it did during the financial crisis of 2008 and 9. Second, it's good news that the US is able to spend $2.5 trillion. Most countries in the developing world are in no position to spend this kind of money. I would suggest that there's no country in the world that actually is able to do that. I don't even think China could even do that. And yeah, but the hidden flaw there is that the US isn't able to spend $2.5 trillion either. They're just printing it. That's like if you show up with, you know, a new stereo and a car and a Lamborghini and all sorts of stuff where it's just been loaded onto the credit card. That's not real wealth. And again, I keep thinking about how if the US economy was so strong, then a sign to me would be that when a serious incident occurs, such as coronavirus, that you have savings, that you can actually help people without needing to hyperinflate the world's reserve currency. So I know foreign ideas in the Keynesian culture we live in, but anyway, fortunately, there's good folks like El Lobo Tigre, practicing rolling my R's there, as you can see. Lewis James has been on the show a couple of times, and he is talking about silver. Rumors of my death have been greatly exaggerated. Interesting to see here. Here is the percentage change in gold and silver. As you see, we're getting into 2019. Gold and the gold stocks doing quite well. Silver still down on the year. Actually got this chart from my friends over at Silvercrest Metals, who I was talking with this week, and certainly a great silver company that if you're not familiar with, but you like the silver stocks, you may want to check into. And here is why, a couple of reasons why Lewis James feels that silver is going to do well. And interestingly here, industrial demand shock we saw in March is real. China uses huge amounts of silver making solar panels as one of the many industrial applications metal has. So the COVID shutdown has caused a major buyer to disappear. Reduced demand, although does not mean zero demand, agreed. Then he follows that up, though, at the same time, COVID shutdowns have also taken a large chunk of this year's silver production off the table, as Peru, Mexico, and others have shuttered mines. And we'll see how long it takes to open up. I heard someone I was talking with today was mentioning, could that be longer than we expect? Hopefully not, but again, Lewis is not promising another mini mania, but I do see that card in the deck. Well, can I promise a mini mania in silver? I don't. I don't want to get myself in trouble just yet, but as many of you who have been listening to the book and have commented on have just seen, if there's some way there's not a big move in silver's future, then I'm not intelligent enough to figure it out. I mean, I don't know what else can happen when it's trading below the cost of production for many of the miners, when you have in excess of 500 people think via paper claim that they own the same piece of metal, which, as I documented in the book, seems to me why we're headed towards the end of It's a Wonderful Life, where a lot of people are going to be scrambling because they find out what they thought they had was not there. So again, one of the advantages of having physical gold or silver in your possession. Um, Quick story here. NASDAQ rallies. This was from Wednesday. More than 1% closes positive for 2020. I just thought that was pretty stunning, that everything that's just happened. Wow, the NASDAQ is back up for the year. And then, which of course made me think about Tesla. And I was wondering, gee, what's Tesla up to these days? And let's see if we can get it to load. Although from that top screen, I can see it was up $40 today, 5%. Tesla clocking in at $819. I'm sorry, it's hard. It's like, y'all, it's hard to imagine. Um, and then perhaps, although what's even wilder is that given what the Fed is doing, I mean, if someone says Tesla's going to hit $4,000 because the Fed is going to make a slice of pizza worth $50, I mean, it is possible. I mean, I hope we don't get there, but perhaps what I'm trying to express is that similar to whether the election we see the NASDAQ's already back positive by the year. Could the other indices be in positive territory by the election? It really comes down to whether the Fed feels like it or not. They print enough money, then sure. I mean, you can, which if you're sitting there saying, no, this can't really be how the global economy works, I can certainly understand that. And certainly when I mean, it's still discombobulating in the sense where I worked on a trading floor and saw that side of it, and then seeing when you take a step back in a different perspective. So such is the fascinating world we live in. But let us check in on the gold and silver prices, which represent the hedge against all this government chicanery. See gold down $14, 1704. I was actually thinking about this morning. I do know that a lot of these banks, and the technical indicators are where things close. Interesting to me to see it close above 1700. Again, is that really significantly important? On one hand, no, but to the degree that, I don't know, maybe I'm missing it on technical chart reading, but to the degree that a lot of people are going to be acting on that, interesting to see the close there. Over in silver, see up a nickel on the day, finishing about 1550-ish. And a quick look, we will see here, Miles Franklin. You can also find palladium about $1,900, up $93 on the day. Platinum still looking cheap to me at $776. I mean, as all the metals look cheap, but in a world where the Federal Reserve is unable to even say how much money they're going to print going forward, they just can't even calculate it. Can't even say it's going to be $1 trillion a month. Might be more than that. You never know. Can only imagine what the real numbers are. Although if you do have anything metals related, buying or selling, any of the precious metals storage, IRA questions, you can get more information about that at Arcadia at milesfranklin.com. So we thank our folks, Andy Scheckman over there. As we come towards the end of today's video, we have a look at, well, there we go. Here's the silver stocks. Again, you see the GDX. I mean, a lot of things pretty flat on the day. Silver miner index, First Majestic down a dime. So not much going on in the mining stocks, but one thing perhaps, now I'm going to give a little warning here. this is some heavy stuff. So, and I aim to keep things focused. So we're focusing on the economics. I mean, I think this is tied into the economics, although for some of the folks who are interested in digging a little deeper into what might really be going on in the White House and some of the deep state rumors that we've heard for years. I'm not sure if you're familiar with Liz Crokin. I've been watching some of these videos, especially is coronavirus being used as a cover for mass arrests. It's some pretty wild stuff. And also, I hear it confirmed from other sources more and more. So I'll leave you to make your judgment. Darn interesting. And I'll put it like this. I hope that what she is saying is right. I have seen enough. I mean, you can see these, you can go find these videos where you see the artwork in the Podesta's apartment, and you can find it. You know how to find it if you want to find it. And again, I'll just say there's a lot of stuff that is out there confirming this, and it was just mind blowing to me to listen to some of the things Liz was sharing. Have thought about inviting her on the show, and maybe we will do that going forward. So anyway, that is this week's gold and silver update, week in review. I thank you as always for joining me. We have such a beautiful audience. We're about to hit 11,000 subscribers. So thank you to each and every one of you in the audience. I'd like to think I've gotten back to just about every message that comes in. I do really put a lot of time into doing that so that again, just to help with whatever I can in whatever way I can as these things are going on. And lastly, as we wrap up, wanted to say thank you to some folks who have sent in donations this week, which does really help out a lot. We've gotten through a rough patch here at Arcadia as we were figuring out how to actually monetize this. Again, those folks of you who have purchased or sold metal with Andy at Miles Franklin, that's been helping out a lot. There was brief time I wasn't sure whether we were going to make it here, although fortunately things have a lot of good things happening. There's a lot of good things that we're going to be bringing you. And if you would like to support the show, well, you're able to do that. The link is in the description field below. It's arcadiaeconomics.com/support the show. And we always appreciate hearing from you. And there's a link there if you would like to make a donation. So with that said, I will wrap up. But if you want more coverage of the gold and silver markets, I was actually interviewed on Trevor Hall's Mining Stock Daily this week and talked about silver and why there is a great positive of the silver price being as ridiculously low as it is. And if you want to find out what it was, well, here you go.